Hey guys, welcome back to the tradinganalyst.com. This is Taylor, and this is going to be a very thorough video on my thoughts about everything that's going on in the market. I'm going to touch on the coronavirus. I'm going to touch on the charts. I'm going to discuss the volatility index. I'm going to discuss a lot of things in this video and give you a really broad picture of what I think is going on right now and what I think is going to happen from here. Okay, so again, thank you for joining me again. The first thing that I wanted to discuss is the coronavirus, and I'm just going to discuss this really briefly. I'm not going to pretend that I am a virus expert or anything like that, but what we do know about the coronavirus is that there's been under 3,000 deaths right now that are caused by this coronavirus. Okay, under 3,000 in the world. Now, this has been going on for 2.5 months. The deaths are slowing. The rate of deaths per day that we're getting are slowing. Now, the other thing that we know is that the common flu, okay, influenza, the flu, globally per year kills up to 600,000 people per year. Okay, so right now we have the coronavirus, which has killed 3,000 people. And then we have just the common flu that annually kills up to 600,000 people. Okay, so the reason that I'm bringing that up is because right now there's a lot of hysteria. Okay, there's a lot of hysteria. Everybody's freaking out about something that is really not a big deal at this point in time. There's 10,000 people in the U.S. that die each year on drunk driving. Okay, very sad, but the fact of the matter is that right now, I mean, we've only had like 1 or 2 deaths in the U.S. so far. So there's a lot of overreaction to this, and yes, it is going to, or has, and will affect the economy in some way because people are overreacting, shutting down businesses, not supplying things because they're not going to business. Schools are shutting down. Those things are real. People are doing those things, but it is in reaction to the hysteria. Okay, what's going on right now is, they've got it. They're basically going back to normal in China. Starbucks has opened up all their stores. Apple's opening up their stores soon as well, and people in China are starting to get back to normal life, and that was the epicenter. Okay, so again, the media is not your friend. The media, best case, they're just trying to get you to watch and read their content. How do they do that? They do that by making their content as sensational as possible. Okay, so this has created a massive downfall in the market. Super quick drop. I think it's like the quickest drop ever. We did 15% in 7 days. 15% in 7 days. That is crazy. To put that into to compare that to what's happened before, it took us 4 months to gain about 10% on the upside. Okay, and then on the downside here, if you look back here, this big drop we saw in to end 2018, that was a 20% drop, and that took 3.5 months. Okay, and that was one of the quickest drops ever. But so this one of the quickest drops ever. So when that happens, notice last time that happened, quick drop, what do we do after that? Headed higher. All right, so right now what I want to discuss is the VIX. All So we're going to discuss volatility, and this is basically people, it's expressing a way to express the fear in the market, showing that people are buying a lot of puts. Okay, so I'm going to show you this chart, this 20-year chart of the VIX. My computer's going slow right now. Okay, so as you can see, I'm going to move my face out of the way a little bit. Here we go. Okay, so as you can see, I'm going to draw this line right here. Boom. Every single time that we've hit this level, VIX has come down. This level is right around 48. Okay, you can, if I can put it a little higher, okay, about 48 to 49. Okay, hit it here, hit it here, hit it here, here, and here. Now, okay, so what does this mean? Every time it's hit this level, it's gotten rejected and headed much lower. Okay, but what does that mean for the market? Okay, well, I'm going to show you that every single time that it hit this level on the VIX, that the S&P 500 and the rest of the market, it created a major market bottom. The only time it's gone higher than this is the late 2008 right here. And you can see it just went up above it for a little bit. Yeah, it went way, way higher, but it ended up dropping back like a month later. And within 6 months, we were all the way back down here. This was the financial crisis low right here. And this, if you're wondering, well, why am I not discussing this further? Well, this financial crisis was, I think, the second worst bear market ever. It was about 50% drawdown, or like 55% drawdown for the stock market. And that took about a year to do, from the peak to the trough, or maybe a little over a year. But this was one of the biggest bear markets ever. Okay, can this happen again? For sure. Anything is possible in the market. But the majority of the time, you get 15 to 20% retracements in the market, and you get a high VIX up to about 48, and it gets rejected, and it heads lower. Okay, so here we are. Last time this happened was in 2010. Okay, 2010, about May 2010. Let's look at the S&P 500 chart. May 2010. All right, so May 2010 right here. Boom, that was a bottom, major bottom in the market. It went from 1,000 all the way up to almost 1,400. So about 35% the market gained from this point to that point. And that was when VIX, the volatility index, had reached the point that we're at right now currently. So that was a big, big move in the market, about 30% up. Okay, so let's look at the next one. Right here, this is August, and August through October of 2011. Okay, because it kind of hit it a couple of times. So August through October of 2011. Let's see, August, right here. August was this month right here. You can see that was the bottom. Okay, that was the bottom in the market, right there. We bottomed, see that buying tail right there? Okay, and then the next month kind of just traded sideways and then bounced at that August month's low, and then boom, we headed higher. Look at that. I mean, we headed higher for several years without really many retraces. Okay, I'm not going to go over the percentage, but I can guarantee you it's, up to, let's just do it. So 1,200 all the way up to we're looking at about 100% gain in the market from that point. Okay, let's look at the next one. Right here. This was, let's see, right there. August of 2015. Wait, is that August? Yep, August 2015 is where the VIX hit 49. August 2015, right here. right there. All right, so you can see that ended up being the low. Yeah, we broke it a little while later for a little bit, but then ended up bouncing right there, huge for a couple of years. All right. So the last one that just happened was, what is this, February 2018. February 2018, right here, okay? You can see right there, created a bottom. The market went from about 2,500 all the way up to a new all-time high, up to almost 3,000. Okay, so that was about a 25% gain from this low to this high. All right, and all of this is when VIX gets super high. Okay, there's always a reason that people think that the market and the world is just going to end. Okay, everybody thinks this time it's different. Oh, this is a global pandemic, yada, yada, yada. Well, I hate to break it to you, but we've only had 3,000 people die. It's very sad, it's unfortunate, but we're talking stock market, we're talking about numbers right here, and it's really, really not a big deal at this point. It's not even as bad as the common cold. All right, most people that are dying are over 60 years old with pre-existing conditions. Okay, people like myself, a younger, healthier person, if I got coronavirus, I probably wouldn't. I'd probably get over it in a week. Okay, this is really not a big deal. So we're talking about the market, though. We're not going to. I hate to keep talking about coronavirus because this is not what it's about. But again, everybody thinks the world is going to end for whatever reason. People thought, World War II was going to happen, or World War III, I'm sorry, was going to happen. People thought the trade war was going to crash the economy. People thought SARS was going to crash the market. And that killed about the same amount of people that coronavirus has killed so far. But I think it was like 2,500 people. And here we are, and the market just bounces, bounces, and bounces. So could this get worse, coronavirus, everything, and spread and everything? Yes. Okay, that could totally happen. But right now we are at historic levels of bouncing on the VIX. And this just means essentially everyone is buying puts. And if you don't know, it's a good counter trend thing to use because the majority of the time, most of the people are incorrect. And you've seen this time and time and time and time and time again. And here we are, once again, to that same level. Okay? So now I'm going to discuss the next thing, and this is the CNN Fear and Greed Index. Okay? And they use, and right now it's at 10. Okay? Extreme fear. Extreme fear. They use a bunch of different factors to measure this. Junk bond demand, you can see that. Stock price strength, so essentially it means the stock prices are going down. And then right here you have the put-call ratio. Essentially, everyone is buying puts, okay, and it's at historic levels. Right here, market momentum, they're below a moving average. Stock breadth is very low, and VIX is very high. And the difference between stock and bond returns. Okay, but that we're not going to get into the details of all these things, but I do want to show you this graph down here. All right, let me move my face. Actually, my face is okay right here. So, as you can see, right now we're at 10. Okay, we're at 10 on the Fear and Greed Index. Now, the last time we were this low was, here we go, all the way back here to the end of 2018. And if you remember, the end of 2018 was when we bottomed in the market. Okay, so we bottomed right here. All right, here's another time that we were down this low. This was the beginning of 2018. All right, this was February 2018. Remember, I just showed you the chart. That's when the market bounced. Here's another one. This was kind of insane that we went down this low on the index right here, the fear and greed. This was about August of 2017, and I'll show you what happened. August 2017, or somewhere around there, was right here. Oh, I'm sorry. Not right there. Okay. I can just get this chart to work for me. All right, so here we go, about right here, just that little dip. You can see the fear and greed index went down to 10, like we are now. And you can see rocketed higher. So again, and here's that one, February, fear and greed, February 2018, that was another one where fear and greed index was down at 10. As you can see, major bottom formed. Here's another time it was down this low, late 2018, and again, that was when the market bottomed. And it is down here right now when price is currently where we're at, okay? So, that's the fear and greed index. Now I want to discuss the chart here, okay? So I want to go back 25 years. All right. So, the reason I'm going back 25 years is because I want to show you how prices have reacted when something similar has happened. Okay? So, as you can see, so first I want to show you what we are not doing. Okay, I'm going to compare it to other market tops that we've seen in the past, and then I'm going to show you what we are doing. So this is the monthly chart for the S&P 500 going back 25 years. Over here on your left is the dot-com bubble here in 2000. Here's the financial crisis right here in 2007, 2008. And I want to point out too that these were two of the worst bear markets ever. About 48% the dot-com bubble, and then about 55% decline in the market for the financial crisis. These are not the norm. Most bear markets are 20%, 30%, something like that. But we will study how they began, okay? Because when bear markets begin, they all kind of have a similar tendency, okay? So, really quickly, bear markets do not just happen overnight, okay? They don't just happen overnight. They don't just fall from the sky, kind of like how we did right here. Now, when bear markets happen, and this is sustained prices lower, okay, what you see is a lot of sideways trading. Okay, you can see right here the dot-com bubble right there traded sideways here for quite a while. Okay, boom, 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 boom. You know, it doesn't need to be exact. You know, I'm not drawing an exact pattern, but you get the point. We didn't really go anywhere for basically 9 months or so. To begin, this was before the actual crash happened in the dot-com bubble. Okay, so before that even happened, we traded sideways. So what happens here is the big boys, they get out of their positions up here, trade it sideways, and then it heads lower. Okay, same thing happened over here, the financial crisis. We traded sideways for about 7 months or so before we actually headed lower. All right, it took time to develop. That's 7 months of not really going anywhere. All right. Conversely, what we just did right here is we went from all-time highs right there, all-time highs to down 15% in 1 week. All right. Now, I want to show you other times something similar to that has happened. All right, so here's an instance right here. Right here, the market's trending up. Right here, right here. This is in 1998, to give you an example. Right here, we made a new all-time high right here, and then boom, just tanked the next month right there. As you can see, when we don't really trade sideways, when we go from all-time highs to a straight move down, you can see what happens next. We headed higher for another 2 years. All right. Another similar instance is right here. Okay, you can see made a new all-time high and then boom, headed lower right here. I know that doesn't look like much right here because this is a monthly chart spanning out 25 years, but trust me, this is a big dip in the market. Okay, again, you know, you see this action over here. This is what just happened on the top right of your screen. So it doesn't really look that much like a big deal on the monthly time frame. And same thing with over here. So again, that ended up creating a bottom. All right. Another similar instance, kind of right here. Made a new all-time high right here, and then boom, the next month, big red month, and then bounced after that. All right. Same thing kind of happened. Well, we kind of traded sideways over here, but the most recent example was really more recently, and I'll kind of zoom in here a little bit so you can see it better. So more recently was right here. Okay, you can see we made a new all-time high and then a big red month right here, and you can see we got a big bounce right here. Now this is one case right here in 2000 to end 2018 where we didn't really bounce right away. Okay, so we made a new all-time high right here, and then this big red month right here, and you can see we kind of traded sideways right here, and then it ended up actually heading lower before heading higher. So that's the only instance right here where that has happened. But the thing that makes this different from all the other instances is that this was preceded by a big down move right here. Okay, so I'll show you just kind of the daily chart, and I'll zoom in a little bit so you can see that action more clearly on the daily chart. Oops, I'm going to just delete all these levels here. Okay, so remember, here was that big move lower right here, which ended up getting the market bounce. But right here, through all this period, yeah, the index is headed up, but there was a lot of weakness under the surface. And that's why this was the real sign that this was going to come. Okay? So this was the first dip. Okay, we had this big move up. Here's the first dip. Okay, and it didn't ended up getting that big dip until the second time. Okay, so first dip, recover, and then second dip is when it really did the damage. Okay, so right here, this is the first dip that we are seeing right now. This is the first dip. So to me, this is very, very similar to this action right here. Okay, so this action right here was like February 2018. And you can see that what happened next was we ended up getting a really big bounce to start, but then we ended up heading lower, and then it took time to form that bottom, and then we really started to break out kind of right here, and we headed higher for about 6 or 7 months right there before it ended up crashing right there. So that's something that I think could easily happen this time. I'm more sure about this short-term bounce than I am about this future decline right here, because what happened is while the market was trending up, you saw a lot of major stocks, Amazon, Google, Facebook, Netflix, Boeing, Caterpillar, and the list goes on. A bunch of stocks in the financial sector, they were all weak while the index was heading higher. You had Boeing and Facebook, financials were all in a downtrend while the market headed higher, okay? Which is not the case for this instance right here, which was everything was trending up. Financials, technology, Everything was trending up, and then we saw this big move lower. Okay, it went from sky high to down in the dirt. Similar thing happened now. Bear markets and big market declines, sustained market declines, take time to develop. All of the major stocks are all doing well, and I'm going to show you several of those key movers and shakers in a second, because the leaders in the market are really what push the market higher and lower. So if those leaders are still strong and holding support, then ultimately the market probably bounces as well. So now I want to discuss really quickly. Essentially, all we're doing is just retesting some support levels. All right, so here's that support level that we made back here. You can see right there. Okay, we bounced off of this prior support, and now it's acting as support once again. All right, so the other thing too is we're bouncing right around where the market had some major support and resistance. So here was that previous all-time high right here. We broke it a little bit right here, and then kind of traded around it around this level. But this is the major level right here. All right. Now I want to draw a Fibonacci level. Most of the time, the 61.8 Fibonacci retracement level is the one that you want to see hold. Okay. If we break the 61.8 Fibonacci retracement level, then we're no longer making normal retracements in the market, and we want to potentially look for a downside move if that 61.8 Fibonacci retracement level breaks. So we're going to draw the Fibonacci retracement level from the major low that we made back here in the bear market of 2018, from right here to right there. All right, and you can see, I'll move my face out of the way a little bit, and you can see that we're bouncing right here at the 50% Fibonacci retracement level. So 50% of the move, we're bouncing right there. Okay, so we could even head quite a bit lower and still be in a normal retracement level for this market. All right. So again, I'm essentially saying that we're not in any kind of a bear market territory or looking like that is going to happen yet. You know, a lot of stocks are at key levels here, and I want to show you those right now. So I'm just going to show you Amazon, and again, here's Amazon at this key level of support. So here we are, this uptrend line. It bounced here when everyone thought the market was going to die. But look at where Amazon bounced, right at that level. Here we are, bouncing, boom. We're holding that support. We bounced off of it on Friday. We're also at this major support level right here. And there's all this sideways trading right here. So between here and here. So you can see it was previous resistance here, bounced to support, and then all this sideways trading. So between about 1800 and 1700 is major support for Amazon. Now, if we end up breaking 1700, then I think, okay, Amazon, not only is Amazon super weak, but the rest of the market is likely going to be in trouble as well. But what we do know is right now it is holding. Okay, we like to, not predict the future. Okay, you don't try to predict the future, because more money has been lost trying to predict a correction or a bear market than actually in the bear market itself. Okay, so that means everyone keeps trying to predict and going short, thinking the world is going to end, but 9 times out of 10, 9.99 times out of 10, the market bounces when everybody thinks it's not going to bounce. I think that's going to happen here. So that's Amazon. And the next one is Google. I'll discuss. Google is essentially, here I drew a Fibonacci retracement level here from the major low down here to the major high up here. and we're right here at the 38.2% Fibonacci retracement level, a total normal retracement. And I want to just show you that essentially, I'm just going to go on the monthly chart because it's a lot cleaner. We had this major resistance right here. Boom, 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 boom. We broke over that resistance right here. And right here, we just came down to retest that resistance, which is now support. Okay? So we retested it, and we're bouncing so far. Again, if we break this level, my kids are having a blast out there. Damn kids. I'm just kidding. So we're just retesting that previous resistance, previous breakout point, which is a totally normal thing to happen in the market. Okay, totally normal. Again, if we break that level, then we can readjust. But right now, we're holding that level, and it's still looking good. So Disney is another one. I'm just discussing kind of the main stocks here. Here we go. So Disney right here, again, just a retest of this. I'll move my face out of the way so you can see this. So this is a major trend line right here. You can see started here, bounced there, right here, and here we are. Once again, we hit it right there last week. I actually bought some for myself and my clients. Same thing with Amazon and Google as well, just to throw that out there. And right now, all we're doing is retesting the previous breakout point. So we based here for, I mean, what is this, like 4 years almost? We broke over that level, and now we're just coming down and retesting that breakout point and support. Totally normal action. Now again, if we break this level, then we can readjust. We can look for some shorts. But right now, I think that at least in the very short term that we can expect a bounce. Now, again, you know, it's not about, the market is not about being right every time. Okay, I lost about just as many trades as I won last year, but I ended up with very nice returns, about 48% returns last year. So again, it's not about being right every time. It's about picking good risk-reward spots. For example, if you're buying right here at the lows like we did last week, if it breaks this level, I'm selling. I'm selling that position. If I'm wrong, you know, a lot of people, they, for example, I was very bullish on the market a couple of weeks ago before the big drop on coronavirus, and everyone was like, oh, you're wrong, blah, 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 you probably lost a ton of money, and I didn't, because I sold on the first day that it dropped. Okay, I sold pretty much the majority of my positions because it hit our trailing stops, and that was before the market declined about 15%. That was in the first 5%. We got out, all right? We got out for stocks that we have been holding for about 4 months for a very nice profit. So the point is that, you know, even if it breaks this level, I'm going to get out and then I'm going to flip short. Okay, most likely I'll look for shorts if that happens. But the point is that the risk is very tight. My stop loss is very close by, so it's a very low risk trade here. All right, and a very high probability trade as well, because essentially I'm betting on the world not ending, which most of the time it doesn't. So yeah, that's Disney. JP Morgan is another one. Here we go. So JP Morgan, we'll just kind of zoom in a little bit. All right, so JP Morgan right here. What do we have? We have a just a retest of this breakout point. Same thing as the other stocks. Resistance, resistance, resistance. Broke over it here, and now we're just retesting it. Okay. Here's this uptrend line you can draw as well. Boom. Right there. Bounce here, there, here, and here we are again. That uptrend line matches up perfectly with the retracement of that previous breakout point. So again, these major stocks are essentially just going back and retesting their breakout point. Again, if it breaks these levels, then we can readjust. But right now, and JP Morgan was another one that I bought on Friday as well. I bought Amazon, Google, JP Morgan, Disney, all nearly at the lows of the day for all those stocks. I had buy orders already in at basically my dumpster diving, that's what I call it, my end of the world orders, and they filled. Another one right here is Nike. Here's Nike. Here's this uptrend line right here. Boom. Okay, bounced here, there, and right here. Again, same thing with the other ones. We're just retesting this breakout point. We dip below it, and now we bounce right there. Okay, totally normal action. You can see something similar happened right here. Boom. This little decline right there. Where did it retest? Retested that previous breakout point. Resistance, resistance, resistance. Break over it. Come down here, retest it, bounce, and then look at this. Here we are higher. So again, everybody thinks the world is going to end. But if you look here, this is totally normal market action. Okay, guys? So again, this is really something I want to stress to you guys. Everything is totally normal right now as far as a price perspective. And that's really all that matters, because we get paid by the movement of price, either up or down, and so on and such forth. So I really hope that this video has helped you out. I'm just giving a realistic view of the market and price and what we've seen in the past, how this compares. If you have any questions, please let me know. Just be aware, I do not care about your opinions about the coronavirus. I don't like talking about it at all. I just wanted to say those few facts about how many people have died and compare it to other things that have happened, like the flu and drunk driving, etc. But beyond that, I do not care about your opinions and thoughts on the coronavirus. So please save your comments for someone else who actually cares about that. I hope that you enjoyed this video. If you have any questions, please let me know. Good luck this week, and I hope you guys make some money.